Hello everybody, what's going on? Few important updates are coming from NIO. For years, the narrative around NIO has been focused on colossal Chinese market, but their aggressive and strategic push into Europe is starting to pay off and in a big way. We are talking about record-breaking momentum in key early adopter markets. Take a look at this data that just dropped. In the Netherlands, NIO registered 5985s 26 EL6 and 8 of the new Firefly model. That is a stunning surge that is going to make this month one of the record book in that market. This isn't just an increase. This is a clear sign that neo premium service oriented models, the cars, the new houses, the battery swap stations, is resonating with affluent, environmentally conscious European customers. And the story is just as strong in Norway, where NIO started its European journey. They registered 1685 Tourings, 25 EL6, and 18 Firefly models. Norway is one of the most mature EV market globally, and seeing these strong numbers, especially for the new smaller Firefly sub-brand, validates NIO's multi-brand strategy. The Firefly is their compact EV aimed at broader European audience, priced around 29,900 euros. The early success of this model in these markets is a massive validation of company's ability to compete not just in the premium segment but also in high volume entry level luxury segment. So the big question here is that why do these specific European numbers matter so much for the stock? Because they are the microcosm of NIO's bigger, more powerful narrative. The successful introduction of Firefly proves the company can operate a successful multi-brand strategy. The core NIO brand maintain its premium pricing, while Firefly capture new high volume segment. They have another brand Onvo aimed at family segment. These three-pronged attack provide a strategic moat against competitors. Second important thing is asset light expansion. NIO is transitioning to a lighter asset approach for expansion, working with local distributors in new markets like Portugal, Greece, instead of their initial highly capital intensive direct model. This means faster, less costly expansion with partners who already understand the local regulatory and customer landscape. This is a huge factor in scaling effectively. Then comes their BAS ecosystem. Their power swap stations are a key differentiator. They solve range anxiety and battery degradation concerns, providing a truly unique service proposition that is a massive competitive advantage in Europe. So what does all that mean for NIO investors? Well, NIO stock has experienced volatility as it common in high growth capital intensive sector. But the company is not just surviving the fierce competition. It is executing on its long-term vision. We are seeing a company with annual revenue growth surpassing 20% and a clear path toward margin improvement and eventually profitability. Wall Street analysts are taking note with consensus price targets suggesting significant upsides from current levels. The record-breaking European performance we see today is just the beginning. It's the first clear signal that the enormous investment in R&D, in power infrastructure, and in their global brand strategy are now turning into tangible sales momentum outside of China. NIO is transforming from a China-focused EV market to a truly global multi-brand mobility provider. The future is electric, and for investors with a long-term horizon, NIO's strategic execution in Europe suggests that its stock is an electrifying opportunity. Don't let the short-term noise distract you. Keep your eyes on the global expansion, the multi-brand growth, and the unique service ecosystem. Because this company is building a formidable force, and the European momentum is the proof that they are moving fast and smart. So get ready for it. With that said, thank you so much for being here. See you in next one.